Hello and welcome to today's video. I hear a lot from business owners that they like the idea of profit first, but to be honest, it seems way too complex and they don't like the idea of having more than one bank account. And I totally understand. And so what I thought I'd do in this video is I would give you an alternative to profit first. One that you can use in your business and one that I recommend to clients that are not wanting to utilize profit first. So first, let me give you an overview of profit first, and I'll link down below in the description a video that I did on profit first. So what it essentially does is it takes the formula of sales minus expenses equals profit, and it turns it around to sales minus profit equals expenses. And the whole idea here is to change your mindset and help you to focus on how can I set aside a profit and how can I make sure that as an owner that I get paid. And it takes that formula that I mentioned earlier and turns it around to change that mindset. So what you do is you have 5 bank accounts, 5 basic accounts that they recommend. And what you would do is you would put a certain amount of your deposits into a profit account, your owner's pay, a tax account, and expenses. And what you would do with your profit and your tax account is you would actually utilize another bank and transfer periodically those money from your profit and tax. And with the idea that you don't want to borrow or be tempted to take money from those 2 accounts to use them in, for example, your expense account. So what you do is you start out with, where am I currently at? Where in my business do I see how much money I'm putting away or I have earned or can put into a bank account for my profit account, my pay account, and so forth. And then where should I really be? And it calculates what that target or goal percentages are, and you slowly work your way towards those percentages. And so as you can see, there's a little bit of complexity on setting up these 5 accounts, calculating that percentage, transferring money in and out. So a lot of business owners say that, this is great, but it's somewhat complex for me, and I really don't want to use it. So I totally get it. And so what I recommend really is to think about, well, how many bank accounts should you really have? And obviously that's one, right? You got to have one bank account for your business. And if you don't, I recommend at least one bank account. But really, I would recommend 3 bank accounts, or I would think about having 3 bank accounts. The first one would be for your operating. It basically would be money in and money out. The second one that I would recommend is a reserve account. If anything we've learned over the past several months is that it's nice to have money set aside in case of emergencies, but also if you're looking to expand, if you're looking to buy any equipment, it's good to have that money around as well. And the third one I recommend is a tax account. And these 3 accounts I recommend really kind of at a minimum that a business owner should have. So the question is okay, that sounds great, but how much money should I put in each account? And so what I recommend is a rule of thumb of, for your operating account, I would look at 2 to 3 payrolls or 2 to 3 months of expenses. And that really depends on how your business is structured. Do you have a lot of payroll or you don't have a lot of payroll? And then I would have a reserve account. What I would do then is take a look at your sales for the last 12 months. I would take that times a percentage of between 10 to 30% of sales. And I know that number sounds big, but again, start small, work your way up to what percentage you think should be in that reserve and operating account. And I'll talk a little bit later on of how to kind of think about what percentage you should use. So an example would be is if you have $1 million in sales, then you determine that at 10% makes sense. You would then have 100,000, of which the operating account would have 2 to 3 months of payroll, I should say 2 to 3 payrolls, not months. or 2 to 3 months of expenses, and then the difference then would go into your reserve account. So now for your tax account, what I would recommend you do is take 30% of taxable income, and if you can't calculate that number, you could always look at last year's taxable income and figure out how much tax you paid, and then divide that by 4, which is your estimated payments that you make for the year. And if you think you're going to grow quite a bit in the following year, then maybe you might want to change that. Or if you want to make it simple, start with 15% of sales. You can always adjust as the year goes on to calculate what that actual tax liability is going to be. So as I mentioned, 10 to 30% is what you should have in your operating and your reserve account. But how do you come up with what that percentage should be? So the way to look at it is this, is you would want to use closer to 10% if you have a higher recurring amount of revenue, your AR collections are great, are pretty fast, your terms are really quick, you have a strong pipeline or backlog, the growth is steady, it's growing but not it's crazy out of control growth, you have no plans for big purchases or anything like that or expansions, there's no customer that represents more than 10% of sales. So think of this as more like a risk approach to coming up with that percentage. So on the opposite side, then the 30%, it's kind of the opposite of the 10. So it would be where you don't really have a lot of recurring revenue, your AR, you may have to give customers long terms, the pipeline may not be that strong, or you're growing really fast and you're needing a lot of cash to fund that expansion, or you have big purchases that are planned. And so what you kind of do is you look at it and say, am I at 10%, 30%, or somewhere probably in between, and select that percentage. You can always change that as things change in your business. But as you can see, this method is you set it and then you think about it later, but you're not constantly having to look at it and change it as you do in Profit First. So in summary, I think Profit First is great. I use it in my business. I use it for some of my clients as well, but I realize it's not for everyone. But having one bank account really, to me, is a mistake. You really should think about having 3 bank accounts, and especially having a cash reserve and also a tax account, to me, are critical for a business, so that you make sure that you have cash for emergencies or for expansion, and especially to make sure that you got that tax bill covered. And ultimately do a profit diagnostic in your business to see where you're at and see what makes sense. So let me know down below in the comments if you use Profit First. Comment back Profit First. If you utilize some other method, let me know what that method is that you use, or what you think about the 3 accounts that I mentioned here in the video. And if you like this video and you'd like to hear more on profitability and how to grow your profitability in your business, hit that subscribe button and I'd love to have you along. Okay? Thank you for watching the video.